All right, guys, we're going to talk about FHA loans. So what is an FHA loan? Why is it popular? We're starting to see more and more of these as we go into 2023 because the pandemic's pretty much over and we are starting to see, obviously, the market cool down a little bit and there's less multiple offers. There's less buyers that are bringing cash. And if you have been on the sidelines and not be able to get an offer accepted the last couple of years because you have FHA financing, now is a great time to start looking. We're starting to see more and more of these get accepted. They're becoming more and more popular. So what is an FHA loan? It's just a government insured loan, Federal Housing Administration. And you can generally go down to a 3.5% debt to income ratio as long as your credit score is 580 or above. Now, if you have a 580 credit score and you're trying to do an FHA loan, you still might have a hard time finding a lender that can do one of those because just because the FHA says that they will insure a 580 credit score doesn't necessarily mean a lender is going to write the loan on it. So they have overlays and there's a lot of other things that factor into it. So just be careful. If you do have a 580 credit score, it's not guaranteed you can get financing, but there is a good chance. So you definitely need to look into it. And if you've got a question, I'm happy to take a look at it and see if we can help you out. So 3.5% down is generally the minimum amount down, as long as the credit score is 580 or above. If it's under 580, you're going to need to have 10% down. On FHA loans, you can purchase single family, you can purchase multifamily up to 4 units, and you can purchase condos. Condos are kind of a sticking point because a lot of the HOAs within the condo are not eligible. So you're also going to need to look that up and make sure that the condo association is FHA eligible. A lot of the condos, they start off FHA eligible and then they don't renew their license and then they're not eligible. So you got to be careful about that. A few of the other things on FHA loans, the county loan limits. There's loan limits in different counties. Some are higher than others. So you just gotta be careful about that. You could be purchasing a house that exceeds the amount of the county loan limit. So obviously pay attention to that. Some counties are high cost, some are low cost. I'm in Louisville, Kentucky, and we are a low cost county. Real estate is not extremely expensive here. So just be careful about that. We're gonna provide a link to that below as well. A few other reasons why FHA loans are popular. If you've had a life event like maybe a bankruptcy or a foreclosure and you can't get conventional financing because the guidelines on those are extremely conservative, there's long waiting periods. Guess what? FHA, there's not that long a waiting period on bankruptcies and the foreclosure. The seasoning requirements are much shorter. So that's worth looking into as well. If you have a bankruptcy, recent bankruptcy at Chapter 7 or maybe a 13, FHA is probably going to be a better option than waiting for the seasoning requirement to meet conventional financing guidelines. So those are just a few of just some attractive things about FHA loans. Another one we look at is, you might have heard the term debt to income ratio. The debt ratios on conventional loans generally got to stay at 45% or under. In certain cases, you can go up to 50%. On FHA loans, we've seen them go up to 55, 56, almost 57% debt to income ratio. So they are the FHA will allow you to write a loan up to 57%. We just gotta make sure the credit score meets the guidelines, and there's other things you gotta look at. But debt ratios are a little bit more aggressive than conventional financing. Now, a few of the things that are drawbacks on FHA loans versus conventional loans. First thing, mortgage insurance. If you've heard of that, also known as PMI or private mortgage insurance. So FHA loans have 2 types of mortgage insurance. They have an upfront mortgage insurance premium, and then they have a monthly or an annual mortgage insurance. So the annual is actually paid in the monthly payment, and the upfront MI is financed into the loan. So unlike a conventional loan, where if you put down 5 or 10 or 15% and you have the mortgage long enough, the MI will go away. On an FHA loan, the mortgage insurance is for the life of the loan if you put down 3.5%. The only loophole on that, getting out of mortgage insurance, is if you put down 10% or more on a 30-year amortized loan, the mortgage insurance will go off in the 11th year. So that is really one of the features I don't like about it. The other one is obviously the county loan limits. If you're buying a home and you're trying to get financing on a high loan amount, like a jumbo type loan, can't do it, unfortunately, on an FHA loan. There's obviously a lot of other things we look at on FHA loans. So if you've got questions, or if you're hitting a snag, if you're buying a home and might have something you want to run by us, just shoot us a message or give us a call here. We're happy to help out, and we look forward to talking to you soon.